Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets as we close out 2025 and look ahead to 2026. Today we've got a packed lineup, mixed signals from the major indexes, some standout movers in the large cap space, and a ton of chatter about what's coming next year. So grab your coffee, let's dive into the trends and figure out what this means for your long-term investment game plan. First up, let's talk about the broader market. It was a bit of a mixed bag today, with the major indexes showing slight declines. The S&P 500 edged down just a fraction, hovering near its all-time highs, while the Nasdaq also dipped slightly, reflecting some profit-taking in tech. The Dow Jones was pretty much flat, and the Russell 2000 took a bit more of a hit, down over 0.5%. Now, for us long-term investors, these small daily moves aren't something to lose sleep over, but they do hint at a market that's priced for perfection and possibly due for a breather as we head into the new year. Zooming in on the S&P 500, we're still seeing strong momentum overall, with forecasts for 15% earnings growth in 2026. That's a solid tailwind, but there's caution in the air. Some analysts are pointing to potential multiple compression, meaning valuations might not keep up with earnings if sentiment shifts. For long-term players, this is a reminder to focus on quality and diversification rather than chasing overvalued names right now. Over on the Nasdaq, tech continues to drive the narrative. Despite today's minor pullback, the index is recovering and pushing toward new highs, largely thanks to ongoing strength in AI and semiconductor stocks. This sector has been a powerhouse, and while short-term volatility is always a risk, the structural growth story here remains compelling for those with a multi-year horizon. Let's check out some of the big movers today, starting with the winners. Among large caps, we saw some impressive gains in commodity and tech-related names. Alibaba and BHP Group were standouts, both climbing over 1.5%, reflecting strength in global demand and e-commerce. Freeport-McMoRan also caught a nice updraft, up over 2%, as metals continue to draw attention. And in the consumer space, Nike saw a decent bump, which is a bit of a relief after a tough year. These moves signal pockets of opportunity, especially in materials and consumer discretionary, for those looking to balance their portfolios. On the flip side, not everyone had a great day. Tesla took a noticeable hit, down over 2%, amid ongoing concerns around safety issues with one of their models. Palantir also slipped nearly 3%, possibly some profit-taking after a massive run this year. Royal Caribbean Cruises wasn't spared either, dropping close to 3%, as consumer discretionary faces some uneven sentiment. For long-term investors, these dips could be entry points, but it's worth digging into the fundamentals before jumping in, especially with names like Tesla, where headline risk is always lurking. Looking at the market movers shaking things up, Nvidia continues to dominate the conversation with a slight gain today, bolstered by news of a major deal with Grok to license assets and talent in the AI space. This just reinforces their leadership in the AI infrastructure race, a trend that's not going anywhere in 2026. Apple held steady, while Micron saw a small dip despite a record-breaking run recently. These names are core to many portfolios, and their ability to innovate will be key to watch as we think about long-term wealth building. In terms of trading activity, Nvidia and Tesla were again among the most active stocks, showing just how much investor attention is glued to these giants. We also saw high volume in names like NIO, reflecting interest in electric vehicles and emerging markets. High activity often signals short-term speculation, but for us long-term folks, it's a reminder to stick to our strategy and not get swayed by the noise of daily volume spikes. Shifting gears to the bigger picture, there's a lot of buzz about 2026 outlooks. Analysts are pointing to supportive macroeconomic conditions and continued strength in AI-driven sectors as key drivers for equities next year. However, there are warnings too. Fed Chair Powell's comments on high stock valuations have some on edge, and there's talk of potential volatility snapbacks as implied volatility sits at multi-year lows. For long-term investors, this means staying disciplined, focus on companies with strong fundamentals, and don't get rattled by short-term market jitters. Over the past week, some large-cap names have posted serious gains. Micron Technology surged nearly 14%, riding the AI and data center wave, while FedEx jumped almost 9% on strong operational performance. NVIDIA also made the list with a solid weekly uptick. These short-term movers highlight where momentum is building, but remember, as long-term investors, we're looking for sustainable growth, not just hot streaks. On the other end, some big names stumbled this week. Starbucks dropped over 5%, reflecting challenges in consumer spending, and Carvana also took a hit, down around 5% as well. These weekly declines can sting, but they also open up potential value plays if the underlying business remains sound, something to research for your long-term holdings. Now, let's touch on earnings. This week and last, we had some heavy hitters reporting. Companies like Nike, Micron, and FedEx were in the spotlight, with results shaping sentiment in their respective sectors. Nike's numbers came in, and while they showed some recovery, the market's reaction was mixed. Micron, on the other hand, continues to impress with strong demand for memory chips tied to AI. Looking ahead, keep an eye on upcoming reports as they'll give us critical clues about consumer and tech trends heading into 2026.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Wrapping up with a quick look at sectors, healthcare led the pack this week with a nice gain, showing resilience amid broader market uncertainty. Basic materials also shone, up over 3%, driven by commodity strength. These sector moves are worth noting, but for long-term strategies, they're more of a guide to where you might overweight or underweight rather than a call to action on their own. On the weaker side, energy barely budged this week, and consumer defensive stocks lagged with a slight decline. These underperformers might be areas to watch for bargains if you believe in their long-term recovery potential, especially in energy, as global demand dynamics evolve.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.